All right, guys. So we have released the Mega Snapback, and I'm going to show you this amazing trade that the Mega Snapback, this 10R trade that the Mega Snapback took for me on Friday. And I'm going to show a quick replay. Now, you guys may or may not know, but you can actually go back and replay a chart from, like actually like tick by tick and watch the candles form. There's a way to go back and like replay it. MetaTrader 8 had I think they called it the replay mode, I think is what it was called. It's been a while since I looked at MetaTrader, but that a way to like a replay it candle by candle, and you can watch it actually place an order, get into a trade, set the stop loss, and take profit, and watch the P&L move up and down as it goes through the life of a trade. So what I'm going to do is I'm going to go ahead and share my screen, and I'm going to kind of walk you guys through some of the settings and just some of the basic stuff that I set up on a 10R trade. Now, most of my settings, I would say 99% of what I do are basically single like base hits, basically like a 1.2R trade. In this case, you'll see I have a 10R profit taker. Now, I don't always recommend a 10R profit taker unless you're going to use a trailing stop. Now, why does that matter? Why do you need to make sure your trailing stop is enabled? Well, as you guys know, if you have a 10R, like a 10R profit taker, and you go to 9.9 and it reverses on you, you need to make sure that it doesn't go back to like a losing trade, right? If it goes to like 9.9 and then reverses, you need to make sure you don't give some back because that counts against you, especially in Apex, as intraday drawdown. And so that's very, very important that you understand how that works. And it counts against you as intraday drawdown. Now, what I'm going to show you is this is set up at kind of runs at 9:06 a.m. And what you might notice is that this is run on M&Q. And you guys see what kind of minute chart this is running on? This is running on a 45-second chart. Now, I haven't actually done a whole lot of back testing on the second chart, 30-second, 45-second chart. I haven't done tons of back tests on it, but I did run a few back tests recently and it actually worked out pretty well. Okay. So what I'm going to do is I'm going to just set this up and we're going to go back and watch it, watch it take this trade. Most of these I do have a little bit slightly different than the basic. I do have like a 1 tick entry, so it's not just so it's waiting for 1 tick above or below to get into a trade. And I'm not using 5 ticks; I'm using 6 ticks for padding a little bit more than normal, taking 2 ticks per trade, and then everything else is pretty much basic. And I'm using my risk allocations based on the account size. So again, this is a 10R trade that the bot took live on Friday with no hands. Looks like, look, mom, no hands. And I'm going to go ahead and replay that for you. It was the very first trade that it took live. I was pleasantly surprised. And I'll show you, I'll go ahead and hit play on this and you guys can watch this play out. Now you'll notice down here, we're in accounts and we're in playback mode. So we're gonna just kind of replay this for you guys. You can see how this played out. And once we get into, I think around 2R and profit, you'll see a little red line appear and it's gonna start drawing where that trailing stop is. It's gonna keep adjusting it as we get into more and more profit so you guys can see how that works. So we're going to go ahead and click play, and you should see this work and play out here. And we should get into it here in just a second. So there we go. So you'll see that blue dot. So it broke above and it closed above. And so it went ahead and took a short trade, right? Almost got stopped out immediately. And so we went ahead and reversed. Remember, snapback is the opposite of the orb. So when it breaks above, we're going to get short, right? And we're going to watch this play out. Can you guys see that number down there? Or is that too bright?
Which number?
The P&L number.
Ah, I can.
Okay, got it. We'll just leave it on the screen. So I'm playing this at like 6x speed. I'll speed up a little bit so we'll see it at 8x. Here in a sec, you'll see that red line kind of pop up. You'll see it start drawing the trailing stop here on the screen. There you go. You see the trailing stop kind of popping up here. See it moving?
Yep.
There we go. And remember, the trailing stop will never like, it always kind of stay put, right? It won't ever like retreat. It'll always go in your favor, but it won't ever retreat. That's kind of the idea. So we'll watch this play out. This is where patience comes in. Don't interfere. Let it do the work. I know some of you are like, oh, we're giving back. Giving back some
Yeah.
gains. Time to
It's stressful
interfere.
just watching it, even though you know how it ends.
Well, if it's stressful, don't watch it then, right? Yeah.
But I
That's
want
easy.
to.
That's an easy fix.
Yeah. But it's intriguing.
So as you see, as we're making new lows in the overall trade, the new trailing stop is making new lows. Almost. There we go. There we go. So I don't know how many candles that is, but overall, that was a $7,400. So basically a 10R win. And normally you have to have a bigger R for you to even see. So you can set this up and you can look at the trailing stop, but you won't really, you're like, oh, I don't see the trailing line on the chart. And that's because you have to have a bigger profit taker to really see it kick in, right? So until you have something like a 3-4R profit taker, you're not going to see it on the chart, right? Because what we're telling it here is we want it to we want it 3 times whatever the average. So if we're looking back, the way that this works is on a 40, we're looking at a 45-second chart here, right? 45-second chart. And let's say that the average range going back 10 periods, so like 10 candles, let's say it's, I don't know, $20, right? So the average is $20. So then we're saying, okay, 20 times 3 is, we're basically saying, okay, $60, right? $60. So we're going to keep the trail about $60 behind wherever the price action is, right? As it moves, we're going to keep it $60 behind, right? And so in this case, obviously, if you have like a $40 target, like it's got to move $40 to hit your target, you're never going to see it if it's trailing $60, right? Again, this ATR, the ATR stands for average true range, right? And the range basically refers to the high minus the low, right? The high minus the low of a candle. And so an ATR is basically the period. So if you're saying 10 period, you're like going back like 10 candles, basically. Like what's the average going back 10 candles, right? So you're looking at a range of 10 candles. What's the average? And then if it's 10 candles and let's say the average is $20, then what we're saying is the multiplier is times 3, right? So that's what the multiplier is times 3. So then we're saying, okay, we're going to always trail it by $60. Wherever the price action is, we're going to keep it $60 away. Now, obviously, these are variables that you can change. And if you're obviously trading something like Bitcoin or MBT rather, or crude oil, obviously the scale of the pricing on the right would be adjusted accordingly. If you're trading something like Tesla or like a $20 stock, those would obviously be adjusted accordingly. It's not always $20. It's the average of whatever the last 10 candles would be, right? Does that make sense? So you're not always hard. It's not hard coded to 20. It's whatever the average of the last 10 candles would be. Does that make sense? Now, if you're looking at a daily chart, it's the average of the last 10 daily candles. If you're looking at a weekly chart, it's the average of the last weekly candles. In this case, we're looking at the last 45-second candles. Does that make sense? And then, of course, you have to have this enabled to see the trail line. And of course, your profit taker has to be usually greater than about 3 to even see it show up on the chart. Otherwise, your trailing stop's too small. You wouldn't see it really kick in. You wouldn't see it like on the chart enough to see that kick in. Make sense? Questions on that?
No?
Okay, awesome. So I'm going to go back and we're going to look at some back tests real quick. And I'm going to show you some cool stuff of what I've found. Let's load some of these back tests. Let's load this one. And do you guys know like the basic premise behind some of the mega orb, mega snapback? Do you guys know like why did we put the time into building them? Why does it
Wasn't
matter?
it kind of just to design a bot, that would one bot for every day of the week kind of thing instead of having to come up with, you know, different strategies for every day of the week. You can
Right,
just do
right.
all in one bot.
Right. And are you guys, I don't know if you guys are even taking advantage of that. I know I have some people say, I can't find something for Tuesday. I'm like, why not use the mega orb? Because ultimately, at some point, we're probably going to retire the regular snapback and the regular orb, right? And you're like, Matt, what if I just want to use those? Ultimately, what you can do is you can say one trade per day. That's kind of like what the current snapback would do, except this has like the trailing stop built in if you want to use it, right? Obviously, if you have a small 1.2R, it wouldn't really ever kick in, right? Wouldn't take effect. So that's ultimately what that would be, except this has some more logic kind of in it taking in effect. But the other thing it does is you'll see in one back test like this, I'm risking $750, 350 contracts. Now you guys remember, what is the goal for a 300K account? The goal is how much profit?
20,000.
20K. And what is the drawdown limit?
7,500.
You guys agree that this meets our criteria for drawdown and profit? Now, this does have a little bit lower percentage profitable, but that's only because of this right here, that 10R. The big wins. Now, obviously we can play with this and adjust this, but I just wanted to show you guys kind of what I've found so far. And let's take a look at some of the trades. Here's a cool, oh, actually one more thing I want to show you guys. So you guys may have seen this before, like on Instagram or Facebook. You may see, 95% bots that have 95% win rates. How many of you guys have seen that before, advertised or somewhere
Oh
on
yeah.
YouTube? How many of you guys have seen that before? Yes, no. Have you seen that before?
Yeah. Yeah.
Now what those are called martingale or grid, right? Grid systems. And what they do is they'll add to losing positions. So let's say you want to go long 2 contracts and it goes against you, then they'll double the position, then they'll double it again, and they'll double it again, and then they'll double it again. And the problem is if you're swing trading, you can get away with that, right? If it's your own real brokerage account, you can get away with that. If it's a funded account, you have to be in cash at the end of the day, right? And there's no telling that it's going to reverse on you. And what they're hoping is to dollar cost average into it so that at some point it'll bounce and you can get out for a small win and you don't ever take a loss. You don't have to take a loss, right? And so those are kind of misleading because 95% win rate, you're like, yeah, that's really good. But think about this. Imagine going to like a table game in Las Vegas, right? And if you win, you win $100, but if you lose your house. How many of you guys would be excited about a 95% win rate? No one. It's because that's only half the story. And I've seen these, I've actually bought some of these bots years ago, and I actually had one of them running before I understood what I was actually down $1,800. And I asked the developer, I'm like, what is this waiting for? Why isn't it cut the loss? And they said, oh, it's waiting to get back to an $80 profit. And I said, well, you said it was a $95, no, sorry, 95% win rate. They're like, yeah, it hasn't taken a loss yet. I'm like, but like, why are we risking $1,800 to make 80? They said, well, that's how we get the 95% win rate. And I'm like, what? So all this to say is this is why we use like this model, what Tracy and I refer to as fixed risk, right? So it is different. We do have, obviously it works very, very different where you're risking a set amount, you're in, you're out, you kind of keep the account intact and you live to survive another day. Does that make sense? So we could build something like this. We literally could build this for you guys, but the funded account program would reject it because you have to be in cash at the end of the day, right? You guys understand why? Like you have to be in cash. You can't carry to the next day. And what happens like a day today where it's nothing but selling? Well, we would have blown up every single person's account if you ran something like this today, literally today, right? The market just pooped its pants and it just never stopped. It was a big sell off for the most part, right? Does that make sense? So that's why on days like today, why we have fixed risk. That's why today fixed risk makes sense, right? But here's what I want you to get. How do you know if it's fixed risk just without being told? Well, look at how much our largest losing trade is, 750, right? Well, fixed risk. What is our largest winning trade? Almost 10 times that, right? Now, if these numbers were reversed, where our biggest loser was 7,500 and our biggest winner was 750, that would tip you off, right? Does that make sense? That's one of the things I always look at is what is the biggest winner, biggest loser? If those numbers are reversed, where I'm risking 1,800 to make 80, that should tip you off, right? And then this of course shows you your average time in the market, right? Max time to recover. There all kinds of stuff in here. This has a pretty decent, some pretty cool stats. I don't know if you've ever spent time like nerding out on some of these numbers here, but I think it's nifty. So again, biggest winner, 7,400. Actually, it had several pretty decent size winners in here. So, yep. So here's another one right here. Where'd it go? 2,500. So that 7,500 was kind of a little bit of an amazing winner. I don't know if you can bank on that every single time, but what you'll see is there's you know, a couple losers, then a big winner. A loser, then a winner, two losers, then a winner, right? Two losers, then a winner, right? That's kind of the MO kind of, and there's a $2,500 winner. So anyways, that's kind of the settings that I've been using and looking at and playing with. Obviously what I like to do, even if something like this, I'm still probably going to run on a Friday, even if it looks like this. Why? Well, sometimes there's just weird anomalies in a month that Friday could just have some weird news, right? I mean, there's a lot of weird things happening. We do have new administration, so maybe weird things happening on just Friday. I don't necessarily want to turn Friday off. As you guys can tell, that's just one, you know, it's probably what, $500 of losses, something like that. Oh, right here, 761. So just one R. So I don't necessarily want to like miss out on that. So I would probably still run it Monday through Friday. But the cool part is because it still seems to be, here's our big winner right there. You can see the losers are pretty small. The winners are, even without this one, they're still pretty big winners, right? Multiples of the losers themselves. That makes sense? So even without the big winners, there's lots of winning trades The losers are significantly smaller. The winners are significantly bigger. Even without, that kind of looks like the middle finger, doesn't it? Giving you the middle finger. But sorry, now you can't unsee it. You're welcome.
Hey, Matt, I got a question.
Yep.
Hey, how do you I notice you have a lot of odd start times. How do you find your start time?
Yeah, I just use the optimizer.
Oh, okay.
Optimization. Yep. And so when I optimize stuff like this, I just use I kind of hard code all the dates, and then I go usually I'll start with just like in this case I just ran just the month of February. And there's that's a great question. There's we added, I forget who added this. I think this was Michael. Someone suggested this last year. Is this entry candle offset field? And what it does is it'll take, in this case, like 45 seconds, and it'll add it to the start time. But what we can do is we can cycle and add, one candle, two candles, three candles. And what we can do is kind of use that as an optimizer. So we can say, we want to go up to, start at 0 and go increment it by 1 and go up to 100. And we can add, start at, 8 o'clock if we wanted to, right? And and kind of cycle through and let it add, in this case, 45 seconds. So add one candle every single time to the start time to find what is the ideal start time. That's how we do that. Does that make sense? Because the reason is because these fields are kind of like, they're not really start time's not really an optimizable field. So what we did is we made a new field that kind of just adds to the start time, and then this is an optimizable field, right? So this kind of adds, how many candles do we want to add? So 0, we'll just use the exact time here, 8. If we have 1, it'll be 8:08 and then 45 seconds. Now, why 45 seconds? Because we have 45 seconds here. So it'd be 08 and 45 seconds, right? So if we say 2, it would be 08, 1, and 30 seconds, right? So it'd be 2 45-second candles. So a minute 30
Oh, I
to the
got you.
start time, right? And so in this case, it'll systematically go from 0 to 100 and add every possible combination. That's how it'll cycle through. But we also could like test and change. I can go from like maybe 1.2 and increment it by 0.2 all the way up to 10 if I wanted to. So I can do, there's all kinds of things we can optimize that way. That's how I do it. That's how I get the answer.